Welcome back. You're watching Closing Trades here on ET Now, and I have with me Dhananjay Sinha, CEO and co-head of equities at Systematix Group, to talk to us about his views of the market. Dhananjay, good afternoon. Welcome. Let me start off, Dhananjay, by getting a sense from you as to what stood out for you with regard to Q2 and what could the upside surprises be for H2 FY26.
So I think as far as the Q2 numbers are concerned, if you look at Nifty numbers, it's basically a 6 to 5% handle on the sales growth. I think the companies have been trying to optimize on their cost on raw material, also on the spending on salary and compensation. So basically, a lot of that is happening to conserve the profit. But I would say it is still fairly lackluster. I think it's low single digit growth as far as profits are concerned. I mean, there is also statistics which shows that the broader markets has done relatively better. But I would say that we'll need to see. It can't be that large companies are not performing well, whereas the broader context is somewhat more relatively better because the economic cycle is virtually the same. I think what most of the corporates are guiding for is a better second half based on the rate cuts. As far as the RBI is concerned, they front loaded a lot of rate easing, etc. And also that you had the GST reduction and the effect of the income tax rationalization that had happened earlier. So I think a lot of these companies, in terms of their commentaries, are showing a better outlook for the second half. So we'll need to see. So that is broadly the context. The markets are hoping for a significant recovery in earnings next year with an average expectation of about 14-15%. So I think this is how the market is positioned at this juncture. I would say that it's kind of somewhat more complicated than what is assumed. I think the expectation of a 15% odd growth is coming from a base effect which is weak, and also the fact that markets have been fairly lackluster. If you look at the overall index performance of benchmark indices, it has been fairly lackluster last year. So people do expect a better return performance next year. So I think that's how the market is positioned at this juncture.
Dhananjay, if I were to stretch that timeline by maybe another year, so let's say FY27 finds favor because of the kind of tailwind in terms of growth that we're seeing. How should one look at FY28? And I say this in the backdrop of the fact that you could see a further 1 or 2 rate cuts on the anvil, which could spur growth and which could aid growth for the next couple of years. And therefore, I'm trying to understand whether you would believe that there is good enthusiasm for the next couple of years in terms of growth visibility on the earnings front. Is that something that you believe will likely happen?
So I think FY2028 will be a long shot. I think people are uncertain in the near term itself. So I think if you look at what RBI seem to be doing is actually while they are easing the rate, etc., they are also they are also in the framework to reduce the restrictive regulatory mechanism that the banking sector is faced with, in the context that they fear that the conventional banking business is not really growing. So if you look at what the RBI governor said, the deputy governor said, and also Anand Nageshwaran, the chief economic advisor for India, in the finance minister, they're all together saying that for the conventional banking business, there is a issue in terms of growth, and hence if you reduce the regulatory structure, they might actually grow, and there is also a sense that they should be allowed into M&A activities, decide on their loan to value ratios based on their own risk assessment. So all these things are something that the regulators and government is trying to do. So I think they are trying to use the banking system to spur growth going forward. The problem, I would say, is not regulatory. It is more about the deposit growth. So if you look at the deposit growth, has been hovering around 9% odd. And I would say over the last several years, it's been in the region of 9 to 10%. So unless you have a deposit growth which sort of moves up, and with the credit deposit ratio at peak levels, you can't really trigger more credit growth and more leverage spending by households are already leveraged quite a bit. So I would say that while the regulatory easing might be a constructive situation, what actually is required is a greater sense on whether household income is rising, with that the savings and deposit growth, etc. So that is one part of it. I would say, as far as tax reduction is concerned, I would say that is still a modest stimulus, and we'll need to see more of that. So that is another thing. And third thing is the trade bit, which is also quite uncertain. We have seen that while there was clustering of global trade in the initial quarters of 2025, because of clustered imports by US, etc., ahead of the tarification, US tarification, that has started to come off. So I think that global thing is not very favorable, and I would say Indian markets will largely be more domestic oriented. So I would say, all put together, it's going to be a fairly nuanced context rather than a one-way inflection that market is anticipating over the next 12 odd months.
Okay, we'll take a pause on this conversation and welcome. Thanks for staying with us here on ET Now. This is Closing Trades, and let's talk about some movers in the day today. Kunal, within the Nifty 50 pack, there are quite a few movers. Let's talk about a couple of them. And among the top, at least the gainers today, is a Hindalco, and the metals pack is moving very smartly. It's also the defense stocks which are doing well today. Any call with regard to a Hindalco, a BEL?
Yeah, I think Hindalco could be an interesting bet. The stock seems to have formed a double, bottom support, the 775, 780 range. I think yesterday as well as a couple of weeks back, the stock managed to test this, support territory, and from there it seems to be taking some good support. So this bounce back, I think for Hindalco, should take the stock back towards 800, 820 range over the near term. So I'm expecting at least another couple of percentage points up move over the next couple of days for the stock. Even BEL, I think on the short-term charts, we were discussing, this some time back also, that it's one of the most stronger names from the defense pack, no formidable ones, still trading, above the key support levels on the short to medium-term charts. In fact, the stock is trading above the 400, 410 odd range, which is a good support for BEL over the near term. So the view remains positive for BEL, being one of the stronger names from the defense pack. And for Hindalco, I would expect the stock to head towards at least 800 to 820 range over the near term.
And what do you make of an SBI, Kunal?
I think SBI has been fabulous altogether. Throughout the day, the stock had showed those initial signs of leadership. When the stock moved to higher from 970, 967, which is the close yesterday, towards 980, 985 kind of a zone. I think it's been a very strong move for SBI. Now, we just need to differentiate that whether this could be an expiry-led move, that traders are carrying forward positions for SBI over to the next series. Maybe the move is because of that. So maybe over the next couple of days, we'll probably get a better hang that whether this was just an expiry day move for SBI after such a kind of a tepid performance from the bank Nifty in the last couple of days, or whether there's more meat ahead in the near term.
Okay, all right. Dhananjay, just a quick question with regard to PSU banks. Are you positive, negative, and specifically SBI? Do you expect it to outperform the private banking pack?
So I think we had a recent theme about PSU banks. I think we were sort of favorable. We had a favorable view on that,
Sorry, I
and
have
I
to
think a lot of
tie
these
this and then.
SBI, BOB, etc., were there figuring with a good return. But I think the performance has been pretty good. I think valuations were attractive, and some of the headwinds were seen coming off. So I think there has been a good performance out there. I think in the recent times there has been a correction in the banking sector as a whole, largely to do with the fact that there has, first of all, there was a run up, and secondly, the rupee had actually been weakening. So I think there is a inverse correlation between the rupee value and the Nifty and the PSU banks in particular. So if the rupee weakens furthermore, there can be a there can be certain headwinds for the valuations for the banking PSU banks in particular. So I would say that our view is more in favor of favor of consumption names, auto names, and defense. You discussed some stocks out there, and metals as well. So I think some of these rotational bets can be seen in the near future.
Okay, interesting. I'll come to some of those names, Dhananjay, but today the stock in focus is Siemens Energy. Pack, is there something that you prefer, especially given the fact that Siemens Energy's numbers were out, they were healthy, but below street estimates is what Kanishka tells us. What's your take?
So I think power sector as a whole has seen a good traction recently with good order book, and the traction remains pretty good. So I think a lot of these power equipment manufacturers are actually showing a good tailwind. So I think the whole sector appears to be in a positive zone at this juncture. So I think within the capital goods, this is largely been showing a good trend. I would say it is significantly driven uh, by government spending, also the private sector capex that is happening on the power side. All of that is actually having an impact on the companies that are in the sector. Of course, there is a lot of these non-conventional energy, solar energy names that I like. So I think this is one segment which is actually preferred in my overall scheme of things.
Okay. Rudra, hi, good afternoon. With regard to the power space, any names that catch your eye on charts?
See, if I have to go for the erstwhile stocks like, for example, NTPC or even for that matter, Power Grid. So some of these stocks, especially from the PSU basket, if you see, they're at their very close, strong support areas. So for example, if you see Power Grid, so for me, yes, at levels closer to 270, 265, it's a good entry point. But however, you are seeing a lower top lower bottom kind of a formation in chart, and now they're coming to their strong long-term support zones. So similar chart patterns are also visible if you see NTPC for that matter. Yes, it is at that strong support area of around 320 315 zone. So as a trader, I will definitely avoid them. But yes, if you want to build a long-term portfolio, I will still stick to stocks like either NTPC or for that matter Power Grid, and they're at their long strong support areas. Only for long-term investment, you can definitely look at NTPC and Power Grid. For a very short-term kind of a trader, and if you are looking for momentum, this is definitely not a sector to be in. And even if you see Tata Power for that matter, even that is also showing a clear signal of falling top, falling bottom formation from levels closer to 410. Stock has now corrected till 380 level. The next strong support for this stock comes only at around 360-65 zone. So wait for this move on Tata Power to come to those levels and then look at buying, or else for short-term trading, clear avoid on this sector.
Dhananjay, hi, afternoon. You were talking about as to how you're still positive on the entire defense pack. But the valuations don't give you comfort to even add positions or buy afresh right now. What within defense is still looking like a value buy to you?
So I think the reason, I mean, we have been positive about the defense sector over the last couple of years, and I think in the context that there are geopolitical tensions, and the preparedness that India has actually been moving towards is something that has been a tailwind for the sector. Also, the fact that India has emerged pretty strongly on the defense export side is also giving a tailwind. So I think what I basically am looking at is a traction in terms of overall order book and the sales growth. So I think there is a ramp up as far as the valuations are concerned. I think if you look at the growth numbers, I think it is justifiable in the context also that many of the other sectors are showing lackluster growth. So I think the reason why we have valuation premium is largely because of the certainty of growth. So I think market is really pricing that in. So I would say recently there has been a correction in the defense stocks. I think those can translate into buying opportunities. So we HAL and BEL are in our portfolio. So these are the two stocks that we have been looking at. Yeah.
Right. Okay. Let's take a very quick break. I just want to revisit markets as well have settled in at, while it's been one of those very range-bound trading sessions so far. Right now, we're just about, trying to pick up once again. 25,964 is where we're currently at for the Nifty spot. We'll track some of the individual stocks, but on the other side of this break. We're coming to you live from the SBI Live studios, and you're watching ET Now. Well, just largely quiet. We've been ambling around in a very, very narrow, range for the better part of today's trading session. Those jagged edges don't really mean anything. It's been a very narrow move from the high to the session lows. Hindalco, BEL, SBI, Bharti, Reliance, they're your big contributors to today's move. And on the flip side, IT is easing off a little bit. Infosys down 1.6%, TCS, ICICI Bank, Interglobe Aviation, Kotak Bank, HDFC Bank. So it's a bit of a tug of war out there. Similar is the picture actually within the broader end of the market as well. It's pretty even, Steven. The advanced decline hands, at least within the F&O pool. So while AB Capital is holding up 4%, Adani Enterprises is down 2.5%, Paytm is down 2.25%, IIFL is up 3.5%. HPCL down 2%, KPIT Technologies reversing its move from yesterday, down 2% today. But Godrej Consumer Products, Federal Bank, Phoenix Limited, they are the ones which are propping up in trade. We're still in conversation with our panel of experts, but Kunal, just wanted to get your sense in on the health of the broader market. And we were chatting about this, I think, day before or yesterday morning as well, as to whether, or rather the trend which has already been prevalent, wherein money is moving out of small and mid caps and finding its way into large caps. Could that trend get more pronounced as days pass by?
Yeah, it should get more pronounced. The only silver lining today, which we were discussing earlier, is that after 5 or 6 days of negative market breadth, so far the market breadth for the first day is positive. Now going into any expiry day and the start of the fresh expiry, when you have such kind of a positive market breadth, it generally indicates that the market sentiment is not as negative, and there could be a hope that maybe the mid caps could also try and make a comeback. Of course, very select few mid cap names. What matters over here, and something which has been missing over the last couple of months, is the lack of follow through for so many mid cap and small cap names. It's not as if that these stocks had not seen any major of an uptick. You've seen broadly a 10%, 15% spike into many of these stocks from their previous swing lows in the last 1 or 2 months. But it's just that there has hardly been any follow through for majority of the stocks, and most of them have actually gone back and retested the previous swing lows, even after that kind of a sharp volume as well as price spike. So the lack of follow through price action is something which has been missing into the mid caps and small caps. That's one of the reasons why I believe that the markets have still going into a bit of a selling pressure over here. But yeah, it all matters that if the market, if the indices go into a stable uptrend, confidence eventually comes back again. And once the confidence comes back, you will see the mid caps and the small caps also start to perform.
Very interesting. Okay. Dhananjay, at this juncture, how are you viewing valuations?
So I think if you look at the valuations for Nifty is somewhere around 22.5 times on a trailing basis, and the expectation on growth is about consensus about 13 to 14%. I think that's pretty steep. I would say that for the trailing earnings that we are seeing averaging roughly about 5 or 6%, I think the relative valuation is on a PEG basis is relatively high. And in our matrix of 25 odd global indices, it is on the higher side if you consider the risk-free rate and the return ratios and all other matrices that we look at. So I think it is on the higher side. I would say that if you look at last couple of years, it has hovered around 21 to 23 times with a median around 21, 20, 22 times or thereabout. I would say this is significantly lesser than what it was pre-COVID at 26 times or so. So clearly there is an impact of global risk-free rate, which has been on a higher side in the recent times. So compared to the pre-COVID level. So I would say the buoyancy as far as the valuations are concerned isn't that much. I would say even though on a relative basis our valuations is on a higher side if you consider.
Okay. Okay. All right. Rudra, do you have a view on where we are, where the Nifty is concerned? What are the levels you're looking at? We didn't take stock of that or your view on that. Of course, expiry date today, and we're seeing a bit of a move already on the index. So, one, your call for today, and then in the near term, what's the opportunity looking like?
See, if you see the open interest built up and even the monthly expiry options which are there, yes, 25,900 and 25,950 will be the broad range. We have another 35 minutes to go for expiry. So I feel this range should be held, and markets have been, for today at least, on Nifty holding this range, and it's a very tight range of about 100 points what you have seen. So for today I feel 25,900 has to hold, and whatever grind we have seen for last 3-4 days, yes, somewhere closer to the 25,800 we have to hold support. And you have to be very stock specific in this market. Look at, for example, private banks, especially tier 2 tier 3 private banks. Look at RBL Bank, for that matter, Federal Bank, they're all very strong. Also Indus India Bank, for that matter. Similarly, if you see NBFCs, look at Shriram Finance, look at Chola Finance, they're all very, very strong. So even in a bad market, these stocks are very strong. These sectors are relatively outperforming. So I will still stay with NBFCs like Chola Finance, Shriram Finance. Look at second tier banks like your Federal Bank, Indus India Bank, they're all very strong. So you have to be sector specific and stock specific in this market, and avoid mid and small cap in general. Let some amount of momentum come in there, and then one can enter into. Don't catch the falling knife, especially in mid and small cap right now.
Okay, hold on to that thought, Rudra. Lots more to talk about, but Dhananjay, we'll let you go on that note. Thanks as always for your time.